Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Everegg Insights. And Steve, we're back from Gulf Foods. We thought we'd do a little bit of a wrap up from Gulf Food. Also going through the results of Pulse, which were interesting. A little bit on our outlook that we're just preparing for subscribers this week, and of course, chat of the week. Let's get into it.
Okay, show notes. We did take some detailed notes and we've summarised that for our colleagues, but we've pulled out some highlights that we could share here. So Gulf Food gets a lot of bad press or bad rap when you see what people write about the event from outside as being a bit of a junket. Gosh, it didn't feel like a junket.
It's pretty hard work.
Yeah, so look, what is it good for as an event? We actually found it quite interesting and quite useful at this time. As a gauge of market sentiment, it is quite valuable because you can efficiently get around the market.
There are a lot of people there from all over the world.
Yeah, in all parts of the chain.
Mm-hmm.
Yeah. It gets a good understanding of what is a fairly important region. And right now, Middle East, North Africa is a vital region in terms of trade balance.
And it was, apart from talking to traders and maybe, I guess, the usual suspects, we were able to talk to some of the processors that are working within the region that were all there as buyers. So that was really valuable. And of course, the networking is great. Lots of people walking around the show. And what else?
Well, it's a good place to do business. I mean, there is quite a lot of business done at that event. It's a trade show after all.
That's right. Although the sentiment was there wasn't a lot of business being done this year, which is interesting.
The missing piece.
Exactly right.
So we're recovering. Just looking at this little summary now, we did a little wrap while we were up there, and that was after day one.
Yeah, and we were very tired, to be fair.
Yeah, so we just embellished that a bit. I thought, the things we'd call out that maybe as we went through that more extended conversations and we talked to more people, I think the sideways drift in the market became more apparent.
Yeah.
That there was a bit of disappointment about what didn't go down at the event. So that sideways drift we'll talk more about as we go on. Plus, I think we had quite a lot of conversations about cheese. One thing that kept coming back, firstly, US milk is slowing, and that's very, very apparent to the world. But also this cheese wave that's coming gets a lot of conversations going. That's an interesting thing to watch. And obviously as this year unfolds, become more important to that market.
And we did have a few more people mention the conflict within the region, not as having a big impact right now, but it certainly is overall dampening sentiment.
Yeah,
interesting.
Great sense of unease over where that goes. Yep.
Now the Pulse.
Yeah.
So after, like a reasonably positive GDT last week, we've got a Pulse event, Steve, that was negative for both whole milk powder and skim. I think whole milk powder down 3%, skim down 2.7%. So what's going on?
It's this sideways drift I think we've talked about. And look, we'll come on to this a bit when we talk about some of these moving parts in the outlook, but I think skim milk powder is probably about the expectations out of Europe through spring. Maybe whole milk powder got a bit ahead of itself. That demand not being there post Chinese New Year, that seems to be a disappointing phase. We've seen some of the indicators out of China are a bit of a letdown. I think there's always this hope factor that China's going to come back from New Year and it's going to go bang.
Charge back.
So those signals are pretty mixed across a whole lot of observable points.
Mm-hmm. So in this context, putting together the Global Dairy Directions outlook for subscribers this week, Steve, and we just thought we'd update this major moving parts. We've done this a couple of weeks ago. What's I guess shifted is really EU Spring's gone more towards the bearish side, which we'll go through in a bit more detail, Steve.
We've lifted that from the bottom row. So we see that weighing on skim milk powder right now. I think the other things, we don't want to call out all these, but the other things that might have moved a bit, EU tight fat supplies, that's become more obvious that's a factor that will stay there.
And again, a big talking point last week.
Yeah.
In terms of what was happening to butter. And then something we'll also to come on to, Steve, is this trade clearance at low prices. We've seen some fairly strong buying for skim, but, is it all over?
That's a good question to come to. So firstly about Europe, and so as this develops, we've seen good rainfall. This is a 90-day anomaly of rainfall, showing rain, been well above average. We know about the Irish story, which has really depleted their milk production, but it's gone right across that, that green belt.
Yeah.
we talk about. Looking forward, though, there's the February map, similar thing, but when you look at the temperature expectations for April and May, they're above normal. So, a lot of moisture that will eventually start to dry out, and with heat is grass.
Makes grass,
Yeah, so I think that's what there's a lot of focus on. But already, France and Germany are almost back to prior year. France always difficult to read. Lots of things going on there. Certainly an unhappy place for farmers with the amount of protests going on. But unhappy about their milk prices, but it's not showing through in these numbers. France is where there hasn't been the great wet period that we've seen in the other regions. So that's a little difficult to read. Germany, though, is back to par, and what last year was a pretty good early spring or coming out of winter. So it's already up to that level. So, look out. We might be seeing a bit more milk. We've got other regions with complications. We'll probably see a similar thing in Poland, which is in that green belt. Netherlands has got some disease risk coming. There's a lot of things in play. More milk probably equals more skim milk powder. That's what the market's looking at.
Sure.
In the US, our US teammates have given the weaker than expected milk production print that came this week, that's actually caused the outlook to shift a little lower. We thought milk might be growing by the time we get into Q3 and Q4. That's been backed off a little bit with probably, cow numbers dropped further. So there's a little bit more pessimism about milk supply. When we then come to this thing that we've put on that outlook, is it's what's happening in trade, and it's always good. Low prices are a good fix for low prices, but we're not really seeing a lot of that yet. But certainly a lot of trade, a lot of skim milk powder shifted to the Middle East, which has gone back above long-term, record tonnages for the region. Just that last month, we've got some, the December trade data that came through was a bit disappointing. And whether that is a factor of the shipping, there's a bit of a wait and see on this. Are we finished with that stock up? Because prices are certainly, European prices are on the way up. New Zealand prices are still on the way down in that chart. So that's something to watch. Southeast Asian trade certainly has picked up a bit, but we haven't really gone back to the levels we've seen a couple of years ago. So that's still disappointing, but is there more to come? And that's, again, there is talk that there's been a bit more trade, a bit more demand. Certainly New Zealand has shifted a lot of product, but is that going to be a general trend? Chart of the week, Joe, what have you got?
Back on the supply side again for chart of the week, and we've got some Oceania updates for January. New Zealand came out lower year on year against a reasonably ordinary January last year. This data came out while we were up in Dubai, and people were a little bit surprised that it was down. This is on a milk solids basis and on a volume basis. So just, in terms of weather, it's always very changeable in New Zealand. You can just see some of those conditions drying out in some areas, and that's probably slowing pasture. This is a slower time of the year anyway in terms of pasture growth. But as always, it quickly change, Steve. We've got a bit of weather coming over the weekend. So Sunday, watch this space.
Yeah, a couple of systems coming together and another one behind them that, is, as we talk about the gift from Australia when we get to this time of year. But whether there's a lot of rain in that's not a big fall, but it might just be enough to keep some, kick pasture along a bit. But this has been going on for some time, these sorts of systems crossing.
Yeah, interesting weather, and nice segue to Australia. Across the Tasman, we've also had some January data out that was positive. There's a little bit of talk around the industry that these numbers aren't actually high enough, that we might have revisions coming out possibly, because the word on the street is that production is even stronger than this data is showing. It is against some fairly ordinary comparables last year. This time last year, some of the southern regions were still coming out of the impacts of flooding. We also have, a little bit different dynamic in terms of the beef market through 2023, much lower prices, so less incentive to quit or cull milking cows. And fairly reasonable weather in Australia over the last couple of months. So whether this uptick is sustainable is always a big question for Australia, but at the moment, pretty good conditions with high milk prices on offer.
And there's a lot of focus on where that goes in the middle of the year, but that's a subject for another video. Thanks for watching. We'll be back again next week.